Texas homeowners know all too well the financial strain that storm damage can bring. With hail, high winds, and heavy rains regularly battering roofs across the state, filing an insurance claim becomes almost inevitable at some point. Yet one of the most confusing aspects of the claims process is understanding how your payout is calculated. The terms ACV, or actual cash value, as well as RCV, replacement cost value, play a critical role in determining what you receive after a roof claim. For many storm-impacted homeowners in Texas, the difference between ACV and RCV can mean thousands of dollars. At A-Star Roofing of Texas, we've walked countless homeowners through these terms and processes, ensuring they understand their policies before a storm ever hits. In this guided video, we're going to break down ACV, RCV, and explain how each works in Texas, and provide real-world examples so you can see how claim payouts differ. First of all, what is actual cash value? ACV is the insurance payout you get after you factor in depreciation. Essentially, your insurer pays you the current value of your damaged roof based on the age and condition of your roof, not the full cost of replacing it with a new roof. This is how it works. Your roof's original cost is adjusted for age, wear, and tear. The older the roof, the more depreciation is subtracted. You receive less money up front, leaving you to cover the difference. Of course, ACV policies have their pros and cons, usually with lower monthly premiums. It's a good option for homeowners who want affordable insurance per month. But the cons of ACV policies is you'll likely pay more out of pocket when the time comes. You need to replace your roof. In Texas, large storms can create unexpected financial burdens that you don't want to deal with. Now let's talk about replacement cost value, or RCV. RCV policies pay the cost of replacing your entire roof with a new one of a similar type and quality without deducting for depreciation. With RCV, you'll likely get a payout that covers the majority of your roof replacement costs. This is how it works. Insurance pays what it costs to install a new roof minus your deductible. Depreciation is withheld at first, but reimbursed after replacement. So you get a couple of checks, not just one. You must complete the roof replacement to cover depreciation, and your roofer can help you with this. Now let's talk pros and cons of RCV policies. They provide fuller financial protection, better peace of mind in hail-prone areas like Dallas-Fort Worth. The cons of RCV policies, you got higher monthly premiums, and requires completing the roof replacement before receiving full payment. So here's an example. Let's say you have an ACV policy and you have an ACV roof claim. Let's say a hailstorm damages a 10-year-old asphalt shingle roof. You have a 10-year-old roof. The roof originally cost $15,000 to install. So looking at depreciation, the asphalt shingles can last up to maybe 20 years, depending on the roof you have. So after 10 years, half is considered depreciated. Half the value is considered depreciated. That's $7,500 that's deducted. Let's say your deductible, if you have in your policy, costs $3,000, okay? Or it's a percentage, which ends up being $3,000. Your insurance payout is going to look like this. So $15,000 minus $7,500 depreciated minus the deductible. The payout's only going to be $4,500. So the homeowner is left covering the remaining $10,500 out of pocket just to replace the roof. So let's look at a second scenario. Let's say there is an RCV roof claim, replacement cost value claim. Let's take the same situation but with RCV coverage. So replacement cost, roof replacement still costs $15,000. The initial payment, insurance issues an ACV style payment up front. So $15,000 minus $7,500 depreciated, $3,000 for the deductible equals $4,500. But if you have an RCV policy, there is an opportunity for depreciation recovery. So once the roof's replaced and proof of work submitted, the insurer pays the withheld $7,500 depreciation. The final payout, $12,000. $15,000 for the roof replacement cost minus the deductible, $12,000. The homeowner only pays the deductible, not the full depreciated amount. So let's summarize. ACV coverage versus RCV coverage. ACV coverage is best for homeowners willing to take on more risk in exchange for lower premiums. RCV coverage is best for homeowners who want maximum protection against costly hail and wind damage, but get higher premiums. Other considerations as a Texas homeowner, the deductible. Under Texas law HB 2102, homeowners have to pay their deductible in full. And at A-Star Roofing of Texas, we cannot waive or absorb it. And that deductible is typically about 1 to 5%, and you must pay it directly to your contractor of choice. So thanks for watching this video. I hope it helped. I'm Chris with A-Star Roofing of Texas, and we are your certified weather stopper roofing company. We do it all. Let us know if we can help, and we'll be there just a phone call away.